Welcome back. The banks are playing the crypto ecosystem and they are trying to trade against all of you. I mean, for us on this channel, we are now bearish on the overall crypto cycle. We know that we are well past the 18 months after the Bitcoin halving, which historically in every single cycle has marked the top of the market. And so far, that thesis has been playing out. And we are today going to be talking about the fundamentals of where the market is, not the pumpamentals. And this is going to have to do with the banks playing the crypto ecosystem. This is going to have to do with the AI bubble potentially already being popped, and how this all plays in with the Bitcoin mining companies that have pivoted to AI, as we are now, in my view, in the downtrend and entering the bear market. Now, keep in mind, the rotation phase from the bull market to the bear market, or the bear market to the bull market, this could take up to 1 full year. And we're already seeing YouTubers and influencers saying after every little dip to buy the dip. We're at the bottom, we hit the bottom, we formed the bottom of the market. Guys, the market does not work like that. We don't hit the bottom of the market the day after we hit all-time record highs. We have to go much, much lower. 50% drops, 40% drops, and sometimes even 90% drops, as we've seen with some of the digital asset treasury companies like Nakamoto and Strive. And so in today's video, I'm going to show you how the banks like JP Morgan are trading against you and trying to effectively manipulate the market themselves. Make sure you guys are subscribed to this channel. We upload every single day to bring you the latest happening in the financial world. Also, give the video a free thumbs up. These are just my opinions and my analysis of the market. You guys can disagree, but if you do disagree, let me know why you disagree and what you disagree with in the comments down below. But let's get into today's video. Now, I saw this posted by Eric Balkunis, who's an ETF analyst over at Bloomberg. He said JP Morgan is now predicting a $170,000 price in the next 6 to 12 months. So effectively into the middle of 2026 or towards the end of 2026, saying that perp deleveraging is behind us and that it's undervalued versus gold historically, which implies significant upside in the next 6 to 12 months. Now, what's interesting here is that all of the Bitcoin bulls 1 or 2 years ago would say JP Morgan's full of it. Their CEO hates Bitcoin. He says crypto's nonsense. But now, as soon as the biggest bank in the world, okay, says something positive about crypto, they're all jumping on it like, oh, Jamie Dimon, thank you so much. Oh my God, yeah, we're going to 170,000 because JP Morgan said so. Well, for somebody who's been watching and analyzing these markets for years, I'm not always right. Most of the time we are on this channel, but I would say that when JP Morgan is making an analysis about crypto, I don't necessarily believe it. And why do I not believe it? Well, let's understand what exactly they're saying here. They're saying Bitcoin could rise to around $170,000 within the next 6 to 12 months as leverage resets and its relative volatility versus gold improves, according to analysts at JP Morgan. The analyst said in a report that the crypto market has corrected by close to 20% from its recent highs, with the sharpest decline occurring in October amid record liquidations in perpetual futures, followed by smaller liquidations in November. They said the November event came as investor confidence was further shaken by over 120 million balancer exploit in the decentralized finance space. Now, according to the JP Morgan analyst, they said the back-to-back sell-offs. The analyst said that the deleveraging phase in perpetual futures now appears to be largely over. The ratio of open interest in Bitcoin perps to market capitalization has fallen from above average levels back to historic norms within weeks, noting that similar patterns are visible in Ethereum markets, though the deleveraging there has been less pronounced. Okay, so basically they're saying the dips are over, the bottom is formed, and now we're going to go higher, okay? Even though we are 18 months after the Bitcoin halving, well past that actually, and we've never hit new all-time highs after that in a cycle. Now, could this cycle be different? Sure. Could we have an extended cycle? Sure. But what is the most likely outcome here? Okay, I mean, let's be real, guys. The fact that JP Morgan is saying this makes me think that they're actually just trying to trade against everybody in crypto. And this is not far out to be thought, right? I want you guys to remember, in the previous cycle, those individuals who lost a lot of money in Celsius, Voyager, 3 Arrows Capital, Terra Luna, FTX, BlockFi, a lot of these people never reinvested in crypto at all. At all. Because they don't trust it. Because they think that it is BS. Because that was the narrative. Crypto's BS, crypto's manipulated, crypto's fraud. And then it was. And so these people never got back in. And so if JP Morgan is saying, oh, well, we're going to hit $170,000 within the next 6 to 12 months, as we're literally in the beginning stages of the rotation phase into the bear market. And remember, every cycle previously, every single one, because these people who say, oh, well, the crypto cycle we have an extended cycle. It's like, no, we don't. Bitcoin halving to Bitcoin halving is approximately 4 years. That's it. That's it. There's no extension of it. And so if we understand that, we can understand what's likely going to occur. And if you guys think that the JP Morgan analysts don't know this, I don't know what to tell you. They definitely do. They have definitely seen the Bitcoin halving chart. They understand how the Bitcoin halving chart works. They understand that from the top of the market to the bottom of the market in every single cycle has been approximately 1 full year. In the last cycle, it was exactly 1 year from the top to the bottom. And so if the top was in October of 2025, that means the bottom is going to be October of 2025. Exactly when they're telling you we're going to hit $170,000. This is the opposite. They're telling you the opposite of what is going to occur so that you lose. And do you think they're going to lose? The banks are not going to lose. The banks are going to win. How else do we know this? Well, Cathie Wood just recently from ARK Invest, she lowered her price target for Bitcoin for 2030 by $300,000, cutting her price target for 4 years from now from $1 million to $700,000, a 30% drop in her prediction. And she said, stable coins are usurping the part of the role we thought Bitcoin would play. And what are stable coins? They're effectively just digital dollars. And what do banks transact in? Dollars. What do banks have access to now? Digital dollars. They're all integrating stable coins. And so they don't care what happens to Bitcoin. They don't care. And they'll say, well, our analysis was correct. We were seeing deleveraging a perpetual future. So we did think that it was going to hit $170,000. But like we always say, we're not your personal financial advisor. But all of the YouTubers, all of the influencers are saying, well, JP Morgan's saying $170,000 in a year, so we're starting the bull market again. No, guys, that is going to be the bottom of the market, period. That's my analysis, at least. Could it change? Sure. Will I be right? Highly likely, but maybe I won't be, right? But that's the way that we are looking at this market. So the banks are involved in stable coins. They're using stable coins. They're not using Bitcoin, so much so that Cathie Wood and her company are lowering their price targets for effectively the next cycle by 30% from $1 million to 700,000, largely due to the stable coin market share and the stable coin usage. And why and who uses stable coins? The banks. Who has their own stable coins? The banks. Which companies are not using, or what financial companies are not using Bitcoin? The banks. So they don't care. They want you to lose faith in Bitcoin so that you go back to using what they want you to use, which is stable coins. So much so that Coinbase is now proposing allowing non-issuers to offer stablecoin interest under the Genius Act. Now, this is from November of 2025. And you can see that Coinbase is proposing allowing non-issuers, meaning Coinbase, right? They're not Tether. They don't issue the stablecoin. They're not Circle. They don't issue the stablecoin to issue interest, because we covered this previously. I think it was in the market structure bill, or it was in a bill that already passed that said the issuers can't basically you can't pass interest on to the end user, right? And who do you think wants that to happen? The banks. It even says here in this article, the banking groups are calling for blanket stablecoin interest prohibition, which opposes what Coinbase wants. They warn that stablecoin interest could trigger $6.6 trillion in bank deposit outflows. So they don't want you getting interest in your stablecoins because they don't give you anything in interest for your dollars, right? When you deposit your money in the bank, you're basically getting nothing in return for the most part. I mean, JP Morgan gives you 0.01%. I mean, it's nothing. And so if you can get 0.01% at a bank, or you can get 4 or 5% in a stable coin, what are you going to do? You're going to put your money in a stable coin, right? And the banks don't want that. Even though they're integrating the stable coins, they want that money for themselves. They don't want to pass it on to you. And this is the difference between banks and newer finance like Coinbase. Coinbase wants to share with their users. They don't want to take everything and give nothing in return. That's what the banks do. And so understanding the banks know stable coins are going to be more widely used. They're fighting the benefits of stable coin usage. And they're telling everybody in their analysis that Bitcoin is going to hit $170,000 literally when we are due for the bottom of the market based on the historical price trends of Bitcoin after the Bitcoin halving cycles. So how does that all add up? It doesn't. And this is where the banks are effectively trying to take advantage of all of us and our investments. So be very, very careful. The other thing to keep in mind in this whole macro view, right, the zoomed out picture of crypto and the stock market and the financial markets is what's happening with the AI stocks and also the AI derived stocks, right? And we're going to talk about some of those in a minute, like Iris Energy, like BitFarms, like Cypher Mining. If we look at NVIDIA, right, this is the largest company in the history of the world by market cap, hitting over $5 trillion in market cap at the end of 2025. Now, after it hit this, number one, we know that NVIDIA is out of China, right? They went from 95% market share in China to zero. This is a huge hit. From what I can gather, their China business was about 20 to 30% of 20 to 30% of their revenue. But meanwhile, there was no movement in the price of the stock except to the upside after we heard about them exiting China. Then we started to hear about, basically like the circular financing with OpenAI and NVIDIA, and then them asking for the government to back them and back their debt and all of this. This is all bubble territory. And just so far, right, when I'm recording this in the middle of November, you can see that the price from this top of the market looks like a double top to me, right? This looks like a double top in NVIDIA. We went from $200 plus down to $180, which is like a 12% decline in just about 1 week. And typically, this is an indicator of end of cycle, end of euphoria, end of the complacency phase as well, potentially. And once you start that downtrend, it's very hard to recover. You will have a lot of bulls bidding it up, but we're talking about trillions and trillions of dollars at this point, right? At $1 movement is billions of dollars. And so to keep the trend higher, you need massive inflows. And that's not what we're seeing. And we're also seeing issues in the quantum stocks, which have also pumped to historic levels. You can see Ionic from last year, $20, it's over 100% increase in just 1 year, 250% increase in less than 1 year, a $20 billion valuation. Meanwhile, if we look at the earnings of Ionic, they don't make any money. They made, in 2024, they made $43 million and they lost $331 million. Just in the last quarter of 2025, they made $21 million and they lost almost $200 million. So they're losing basically about 10x of what they're making, right? I mean, it's absolutely crazy, and it continues to go up in value. Well, we also found out from Common Sense Investor that Ionic is diluting the shares of their company, very similar to what MicroStrategy is doing. You can see that in May of 2024, the company had 211 million shares. And at the end of October 2025, it had 354 million shares, which is an increase of 142 million shares, a whopping 67.5% increase. But it gets worse. They said the slope is accelerating, meaning they're issuing even more stock as time goes on. This is a very indicative of trying to tap as much liquidity as they possibly can because they understand. Typically, when the company thinks their stock is overvalued, they'll issue shares to bring it back down because they know it's going to come back down regardless, but they want to capture that money while it is overvalued. Same thing that we're seeing with MicroStrategy. So he said the filings from Ionic tell you that their ATM share issuance, they're buying revenue through stock issued acquisitions, right? We'll give you the stock to buy your company. Evergreen equity plans auto ratchet the comp pool every January 1st. The RSU grants are every quarter, making insiders richer. And he said, when you stack these together, it's obvious what's happening. They're using equity to make insiders rich and buy revenue. Ionic doesn't generate enough operating cash, which we just showed you in their earnings, to fund the roadmap. So the only answer is paper, right? To print more shares and make money that way. And that's exactly what they're doing. And we're also seeing the same type of thing happening with Iris Energy. Iris Energy it made the pivot from Bitcoin mining to AI. But just recently in November, we got their Q3 earnings and nothing that we didn't know was going to be in that, right? A lot of people forget, buy the rumor, sell the news, right? You're buying the rumor, oh, they may get a big contract with one of these AI companies, which they did. So it was buy the rumor, the price went up 10x over the course of the last 6 months or so. And then you sell the news. We found out that they made an agreement with Google. They made an agreement with Microsoft. And so what else after that, right? Are we overvalued? Maybe, maybe not. There's a lot of people who think that we're not overvalued, which means we're either at value, at par, or we're overvalued. And so I should say undervalued. So if we're undervalued, what is going to be the catalyst to bring the price higher, right? Because again, their earnings just highlighted everything we already knew about the company and where they were going to be moving towards over the next 6 to 12 months. But a lot of people missed their actual line by line earnings report. The Couch Investor on X stated this. I really hope most of you know how to read this. There would be no net income for Iris Energy without $665 million in unrealized gains on their financial instruments, like capital calls and prepaid forwards. And you can see right here on their earnings, their unrealized gains or losses on financial instruments was $665 million. If you remove the $665 million, they would have had a net loss. And technically, they still do have a net loss because this is unrealized, meaning they didn't sell. The same way MicroStrategy is saying that they're earning $10 billion in revenue on their Bitcoin holdings, but they didn't actually sell the Bitcoin. And if Bitcoin goes down in price, which it has, that unrealized gain is puff of air. It's nothing. And so we're seeing a lot of risk factors here. Okay, we're seeing a lot of risk factors. We see the quantum companies diluting their shares and highly overvalued. And most of these companies are stating that we're not even going to reach quantum advantage for 5 years and reach any kind of quantum breakthroughs for another 10 years. So what are we actually pricing in here? Just the development of the technology? Maybe. We're seeing NVIDIA, which was basically 20% of their revenue was wiped off the map, and there was no movement in the stock. In fact, the stock went higher based on that. That doesn't make any sense. And by the way, they're also involved in circular financing with all the other AI companies, with OpenAI, with, I don't remember the other ones, Microsoft maybe, and some of the other AI companies. It's just circular financing. They're all lending and borrowing to each other. That could work, but it could also crater everything. And so Iris Energy is part of this because all of this has to do with Iris Energy renting out their GPU space for AI compute, but all of the liability is on Iris Energy because they own the GPUs, they own the computers, they own the servers. This is very different than other companies like BitFarms, which their focus is not, we want to own the GPUs, they want to own the energy, and they can rent out the energy. And this brings us to BitFarms, because historically on this channel, we have been very, very bullish on BitFarms. So much so that I've been talking about it through the double bottom, which happened in the middle of the year. And we called that double bottom. Go to my YouTube page, youtube.com/the Cryptoviser. And if you click on my posts or community tab, you can see, just scroll down to August and you'll see that we called the bottom, double bottom on BitFarms. And then we 10x'd from there. We went from 68 cents to basically almost $6.80. So basically like a 9 to 10x. And we've come down. And the difference between BitFarms and these other companies like Iris Energy, Cypher Mining, etc., is number one, a lot of these companies have gone up 10x and maintained that level. But a lot of these companies also have partnership deals with other companies, right? BitFarms doesn't just yet. But I don't think that BitFarms, this is a problem, right, for BitFarms, because they didn't move as fast as the other companies in terms of trying to get these companies on board, and or they're doing things different. So while Iris Energy is owning the GPUs, BitFarms is like, no, we're not going to own the GPUs. We're going to own the energy. And these companies, they may want a better deal for themselves. So they're going to say, no, we'd rather go with Iris Energy because Iris Energy is going to take all the risk. Where BitFarms is like, no, we're not taking that risk. We'll own the energy, but you have to buy the GPUs. And so that puts BitFarms a little bit behind in the short term. In the long term, I think it's going to be much better for BitFarms. But at the same time, we also have a race, right? It's a race to capture the supply demand, the demand, while the supply is still limited. And that's where BitFarms may be held back. And that's, I think, why we're seeing this pullback in the price. Now, I'm recording this before they announce their earnings in the middle of November. But in my view, I don't think there's going to be much of a change, similar to what we just talked about with Iris Energy. Buy the rumor, sell the news. Like, we already know what these companies are doing. I don't think there's going to be any major announcement at their earnings that will significantly change this thesis that I have about all of this. Maybe it will, but I don't foresee that. Because we would have gotten some kind of clues, I would imagine. But then, the question is, and I've gotten this question a lot on my channel, Cryptoviser, do we sell BitFarms or do we hold? Do I sell or do I hold? Well, listen, I'm not here to tell you what to do. I just give my opinions and my analysis. But I think that all of these companies, Iris Energy, Cypher Mining, TeraWolf, BitFarms, all the Bitcoin mining companies that pivoted to AI, I think they're all going to kind of be in the same space. They're all going to be kind of held up or held down based on what the largest company is doing. So if Iris Energy has a 50% pullback, let's just say, this is going to affect the other companies as well. But we may see a rotation where people are taking profits out of Iris Energy, waiting for lower prices in the other Bitcoin mining companies that pivoted to AI, and then buying into those. Because Iris Energy is almost $16 to $20 billion in valuation. Cypher Mining is $8 billion in valuation. Most of the others are under $10 billion in valuation. So if Iris Energy comes down under $10 billion, which is a 30 or 40% drop, there's a big potential that some of that money will flow into these other Bitcoin mining companies that pivoted to AI that have less risk than Iris Energy does, like BitFarms. But that doesn't mean in the short term or medium term, we're not going to have downward pressure. And I think this just generally goes with what we're seeing with NVIDIA, OpenAI, the quantum stocks, and these AI pivot stocks. I think we're seeing a macro pullback, a macro correction. And while it may not be directly correlated with the Bitcoin cycle, I think that if we have a macro pullback, this could be an opportunity to buy in these AI companies that have the energy, because that's not going to go anywhere, that have the contracts, because that's not going to go anywhere. But I don't necessarily agree with JP Morgan that it will be the buy the dip for crypto, because we have not seen collapses in crypto, and we've been in a bull market in cryptos effectively since the end of 2023. These AI companies, effectively the bull market has just begun. And so that's kind of my overall macro viewpoint on crypto versus these AI and quantum computing stocks and companies. And I want to know what you guys think. But personally, I do think Iris Energy is going to come down precipitously. I think Nvidia is going to come down. I mean, it already has fairly significantly. I mean, from $210 down to 180. That's a $30 price drop, 15%, something like that. And I think that we're going to continue to see these under pressure for probably a short period of time, right? 1 to 6 months. And some time in that will be a buying opportunity. And I'm going to keep you guys up to date on my analysis on when I think that buying opportunity will be. But I would always say this: if you're in profits, it's never a bad time to take profits out of the market, because you would rather take profits than go back in the red. With that, don't forget to give the video a free thumbs up. Hit the subscribe button. That way you never miss a new video. We upload every single day of the year. I'm not telling you what to do in your portfolio. I'm just sharing my opinions and analysis on the market. I'll see you on the next video. Thanks for watching.